Hello, everyone. Matt Clark, research analyst with Money and Markets, here with your weekly Bull and the Bear podcast. Now, if you haven't already, I do want to make sure you are subscribed to our YouTube channel. This is where you're going to find great new features every week with Chief Investment Strategist Adam O'Dell, Green Zone Fortunes co-editor Charles Sizemore, and myself each and every week. We've also created a new membership program on our channel. It gives you exclusive cannabis market information, as well as stocks, interviews, news, and more. We're looking to expand this as well to go beyond cannabis. And right now, access is as little as $1.99 per month. Just click the join button down on our YouTube channel page, and you can find out more information about that. Now, on with today's podcast. About a month ago, I explored the correlation between Treasury bond yields and the stock market. I know, overly exciting. However, at that time, I examined bond yields and the rate of inflation, how it could impact the stock market. The 10-year Treasury yield was around 1.36 in the middle of August, which is about 38 basis points lower than the 1.74% yield it had in March when it hit a high. I also mentioned yield spreads between the 10-year Treasury and the 2-year Treasury, which was below 100 basis points at the time, indicating slower economic growth. Now, today, I'm going to dive a little deeper into how the bond markets have recently impacted stocks. Now, first, let's take a look at the 10-year Treasury yield over the last 12 months. Bond yields rose above 1.6 during the spring months of the year this year. And then, as Chief Investment Strategist Adam O'Dell suggested, those yields dropped back to around 1.2% into the summer. And we saw a nice bit of growth in the stock market during that time as well. However, from the time I talked about bonds and inflation, the 10-year Treasury yield has now slowly started to tick back up. And on Tuesday, it settled at around 1.54%, the highest yield we've seen since June. Now, the yield chart becomes more compelling when you overlay how the three major stock indexes have performed during the same time. Now, first we see the S&P 500. Despite the rise in bond yields, which if you're looking on YouTube, that will be the blue line on this chart in the spring, the index, which is the orange line on the chart, continued to climb, which is not typically what is done historically. Usually when bond yields rise, stock market market indexes tend to drop a little bit. Bond yields faded and the index continued to reach new highs as we moved on through the summer months. But now that happened until Tuesday. This is when bond yields rose, but the S&P performed in a way it traditionally does when that happens. It fell. Now, you can see a bit more action when you compare the yields with the NASDAQ. When bond yields in this chart, the blue line, went up in the spring, the NASDAQ, which is the orange line, did fall slightly because traders rotated out of growth-related tech stocks, which makes up a good portion of the NASDAQ, and moved into bonds and other safe havens. Now, if you compare the Dow, which is the orange line on this chart, with Treasury yields, which is the blue line, you see a similar pattern here to the S&P 500 comparison. That's because tech stocks are a little more laden inside the NASDAQ than they are with the S&P and the Dow. The Dow really didn't see a big drop when bonds reached above 1.6% yield in the spring, but the index did fall this week when bond yields jumped above 1.5%. Now, this could all be an indication that market reactions over this historical bull run could be starting to slip more in line with traditional market moves compared to things like inflation and bond yields. Before, you would see slight dips in indexes when bond yields would rise or when inflation would rise. We really didn't see a lot of that happen over the course of this bond market, this bull market rather. But now we are starting to see a little tighter correlation between the indexes, the stocks, and the bonds. Now, essentially, it could mean a closer return to normalcy for stocks related to these outside forces. And another thing that I mentioned in August was that market maker Michael Burry, who was a subject of the film The Big Short, added a significant short position in the iShares 20-plus year Treasury bond ETF, which tracks the performance of long-term bonds. His bet was that inflation would continue to rise and bond prices would push investors out of the market. At the time, I said that Burry might be onto something with this short position and that bond yields would continue to rise. Well, sure enough, if you look at TLT, which is the ticker for the bond ETF that Burry shorted, it shows a sharp decline in the ETF's price over the last few weeks. After reaching around $152 per share earlier in September, the ETF has shaved off about 5.2% off its value and was trading at around $144 earlier this week. Its relative strength index is also dangerously dangerously close to that 30 mark, which is a bearish signal for an equity in technical analysis. And it means that Burry's short position in the stock, ergo, his bet on bond yields and inflation continuing to rise is paying off for now. But as we've seen with this record-setting bull market, anything can happen. Now, I also want to switch gears and take a look at the results from our latest YouTube poll involving cryptocurrency. Last week, we asked you about the value of Bitcoin and where you thought it might be by the end of the year. About 45% of you said that the popular cryptocurrency would remain under $50,000 per year per coin, by under 50,000 at the end of the year per coin. Around 42% of you took a little bit more of a bullish position here and said that Bitcoin was positioned to go up to between $50,000 and $100,000 by the end of the year. 13% of you said were even more bullish and said that Bitcoin would be valued at above $100,000 by the end of the year. Now, as of this recording, Bitcoin has fallen to around $42,110 per coin. Following Tuesday's market sell-off, the cryptocurrency lost more than $260 in value. It fell to a low of $40,783 in the 24-hour period from Tuesday to Wednesday morning, according to CoinDesk. However, Bitcoin still has a positive 46% return year to date. Now, remember, with cryptocurrency, anything can happen. It can go up just as fast as it can go down because the broader cryptocurrency market is inherently very volatile. Thank you to everyone who voted and commented on our poll. We do them each and every week, so make sure you check back on YouTube and vote. We do these polls every week. They're on our community tab, so just check that out every week. We usually try to put those up Thursday or Friday and give you a week to vote. We talk about the performances here on this podcast. We've got a lot of great content on our YouTube channel. Do want to make sure you're checking that out. We've got Ask Adam Anything, Investing with Charles, our weekly marijuana market update, this Bull and Bear podcast, a lot of great things. So we're doing things every week, almost every day of the week, actually. So make sure you're checking back on YouTube often, or you can subscribe and then mash that notification bell and get notified every time we post up a new video. Don't forget about our membership program as well on YouTube. It's dedicated to giving you more insight and information into the cannabis market, and you can get into it for as little as $1.99 per month. Just click join on our YouTube channel page, and you can find out more about what you get and what's involved with that program. We're looking to expand it as well and go beyond cannabis. My team and I have been kind of racking our brains trying to figure out what to do, and we're going to come up with some solutions and start pushing out even more value on that membership program. So now would be a good time to jump in and get involved. We're also looking at ways to broaden our live chat. We've done a few live chats here on YouTube before, and they've gone very well. We've talked primarily about cannabis, but we've also talked about the broader market as well, and we've had a lot of great success. So we are looking forward to doing more of those. We're going to have more events planned coming up. So check back on YouTube and you can find out more about that. So if you have any questions for myself, for Adam O'Dell or Charles Sizemore, or you'd like us to look at a particular stock or a sector or a news item, then email us. That email address is feedback@moneyandmarkets.com. We'll flash that down below. Feedback@moneyandmarkets.com. We love to look at your feedback and what you have to say, what your thoughts are, and what your questions are. We look at those every day and love to see. You can also comment below on our YouTube channel as well. That also serves. And if we do use a question you ask, or maybe if you make a video of you asking that question and we insert that video into one of ours, then you are going to be in line for some very cool Money and Markets gear, including hats, t-shirts, sweatshirts, all sorts of cool stuff that we will send out your way. So make sure you send that email to feedback@moneymarkets.com or comment below on our YouTube channel. Also, head over to moneymarkets.com every single day of the week. We provide you safe, sound, smart, simple, profitable investment information for your portfolio. So do check that out and sign up for our free daily e-letter. You'll get that sent to your inbox for free each and every day of the week. Until next time, this is Money Markets research analyst and host of the Bull and Bear podcast, Matt Clark, wishing everyone safe trading.